Let's talk about that and these markets with two of our favorite people. Joe Moglius, former CEO and chair of TD Ameritrade, also co-founder and executive advisor of FG Nexus. Paul Hickey is co-founder of Bespoke Investment Group, on set, and I just found out both these guys went to the same high school.
Yes,
Go Rams.
Yes.
How bizarre is that? But anyway, welcome. Appreciate it, Joe. Thank you guys for coming in. Are you worried that this market is anything like 2000 to 2002?
I'm not. And here's the reason why. I don't think we really know, Brian, what the future of AI is going to be. I mean, we have an idea what it can be. We understand the significant productivity they can have with us, the incredible impact it's going to have on margins. But you go back to the 90s for a minute, I appreciate the parallel. But the dot-com bubble, everybody was coming to market. A lot of those companies, more like a SPAC craze, not as bad, but more like a SPAC craze. A lot of those companies weren't very good companies. But you had a pretty significant 5-year run. And when it blew up, it blew up. They didn't have good balance sheets. Most of them weren't profitable, et cetera. Now, today, fast forward on this, I think this is still the beginning. This is 1994, 95 as far as AI, as far as back then goes for today. But look at the companies. Look at the Magnificent Seven. They got incredible balance sheets. If they were totally wrong in terms of investing $50, $100 billion, they'd be okay.
Wildly profitable.
Wildly profitable.
NVIDIA wildly profitable. Oracle wildly profitable. But OpenAI is not. And OpenAI seems to be the one driving all of this. NVIDIA invests in OpenAI, which invests in Oracle, which invests in OpenAI, which invests in NVIDIA.
So I think one of the things that's brilliant with what Alma's doing as far as OpenAI goes, he's doing strategic alliances with a lot of the other really great firms that are very much involved with this. And that partnership, I think, is going to help them overspan the next few years. But these companies are really solid companies. And it's not at all like it was in the 90s. The 90s, we did not have real companies doing the whole internet thing. Today, we do.
Well, they created metrics, Paul. I don't know if you're probably too young to remember this. I was at the NASDAQ. They used things like revenue per eyeball. They were literally making up financial metrics to justify the existence and the sky-high stock prices of some of those companies. I actually have a picture of myself in 99 at the NASDAQ. I'll tweet that out later. Are you worried at all?
So for the longer term, not necessarily worried. In the shorter term, though, I think we've gotten very extended over the shorter term. And in our weekly report we sent out last week, we did a little exercise. Let's take a step back to April. And as unsustainable as the selling was in April and as extreme as we got relative to the 200-day moving averages and the major averages, now coming into last weekend, the NASDAQ, the semis, the tech sector, communication services, they were just as extreme to the upside as they were to the downside in April. So over the short-term basis there, these things need to rest. Or otherwise, we are going to get a situation like 1999 where things are just way out of control. And then when you get that situation, the fall can be much bigger.
I heard this stat on halftime. It was Josh Brown had it. Scott had it. It's the NASDAQ 100 is now 101 trading days above the 50-day moving average. And if we go another 30 days, it'll be an all-time record. And what that goes to, I think, Paul, is some of the short-term momentum that you're talking about and whether it might be overdone.
Yeah, so, I mean, another similar stat is we've been at overbought levels on over 90% of trading days over the last 4 months for the NASDAQ. When you look back, that's an extreme. Very seldom do you see that. And when you have seen that, the shorter-term returns of the index have been weaker than average. They haven't necessarily been negative, but they've been weaker than average. So you do need to see some sort of pause in the market here.